And welcome to the 32nd episode of Hung Chin Han Sweatin Money. Wait, before I introduce myself, mandatory disclaimer. We may or may not have ownership or other positions in the stock mentioned on this show. Don't buy stocks based solely off what you hear in this podcast, and always do your own homework and research before investing in stocks. This episode was recorded on April 3rd, 2016, episode number 32. I'm your host, Kong, along with my co-host, ran out of breath, son. So let's take a look at what's in the news. Oh. There we go. You able to talk?
Yep.
Okay. Manufacturing orders increased for China, which is a good sign that the other countries have a good or a higher demand for China's goods. But China's manufacturing sector is shedding jobs. This is after the S&P had downgraded China's credit rating. On Monday, Dallas Feds came out with the manufacturing report. Overall, just like the national average, manufacturing is down as a whole, although, compared to recent, there was a slight uptick. Some of the things that they noted was that the chemical manufacturing sector remains stable, but fabricated metal production has suffered from the volatility of oil. Machine manufacturing was doing relatively well, except for those selling oil equipment. They did note how the higher dollar has taken a bit of a toll on some of their manufacturing activity. Any comments so far?
Well, I mean, the first article's comments, kind of makes sense. There's a question of what drives growth. I feel like a lot of the factors that drive growth might not exist at the present environment. And secondly is that, as the dollar becomes stronger, as the world, starts valuing more of America's currency due to the perceived stronger economy, then our ability to buy things is going to go up, but then our ability to sell things is going to go down, and then it's going to manifest itself in, basically how businesses conduct businesses, like
Well,
revenue.
yeah, the ones that do have jobs, their abilities are going to go up. But I mean, the other people that are stuck in manufacturing jobs and, now they're going around looking for jobs, that's going to be an issue as to whether or not they're going to be able to find anything.
Well, I mean, like from the business standpoint itself, like they're having a hard time selling things to people as well, just because relatively speaking, the cost of our goods is more expensive now.
True, true. And what about the Dallas Fed's announcement? Anything on that?
Um, yeah, I mean, it's kind of in line with what like Yellen's expecting, like a slowing global economy and the concerns with that. But at the same time, is that we do see that the American economy is still very strong. If not, it's still like strengthening. So, there's still talks about possibly increasing interest rate later down the line, and it's still due for America's economy. So I think everything is just kind of slow down a bit because, I mean, there's no real incentive to grow anything right now. Um, it's basically Yellen signaling to the rest of the world that, hey, you know what, America's not going to grow as fast. We're not going to consume as much. And then the rest of the world saying, hey, you know what, we're kind of not growing as fast either. So everyone's kind of relaxing and chilling right now. There's like a lull period. I think we're falling into a lull period at the moment.
Yeah, I think you pretty much took the words out of my mouth because Janet Yellen did open up her mouth again, and there's pretty much no rate hikes until December, if I did read this article correctly. This despite indicators of inflation coming at a slight tick and job numbers actually looking pretty good. So,
Yeah, sounds like a lulling period. Caution from all over.
yeah, and U.S. auto sales numbers for March came out last Friday, or this past Friday, I should say. And although sales numbers were up 3% from the year prior, Um, Auto sales companies are spreading themselves thin just to keep sales numbers up. This despite lowered gas prices and relatively mild weather. Most sales were made to fleet organizations instead of individuals. Companies like Toyota fell 2.3%, but Honda actually did 9.4% better compared to the year prior. Uh, Key thing to note, once again, I do own stock in Honda Motors.
Nice.
So remember that time when Snowden leaked a bunch of U.S. confidential documents, and the U.S. is now claiming that these leaks are dramatically hampering their intelligence collection capabilities? Well, I wonder what they'd like to say, about this issue, where 11.5 million documents were leaked listing the bank accounts and assets of a bunch of world leaders, sports athletes, and other rich people held in offshore bank accounts. The law firm who was hacked said that the accounts were set up not for the exclusive purpose of evading taxes.
No,
So,
nonsense. I mean, they just also have the benefit of evading taxes, and other usage of it is, to hold money there, and the third usage is like, place to easily access your money when you're visiting from out of town.
right.
Many uses, not exclusively for tax evasion.
No, no, definitely not. Because that would be against the law. And no one wants to be, breaking the law,
Of course not. As long as you're not exclusively using it just for tax evasion, it's okay.
of course. I'm glad you see it their way.
Ha! I'm a secret Republican.
So, well, speaking of leaks, WikiLeaks got some internal IMF messages, and they included some conversations about Greece. Greece says that these documents, well, they're claiming that these documents or make it out to look like the IMF is actually trying to push Greece into the brink of bankruptcy as a tactic to come to a conclusive deal by April, or the end of April, I should say. The IMF has denied that they are using such a tactic. What are your thoughts?
Um, this goes back to what Germany wanted.
Yeah.
Like during the discussion with the Greece bailout, is the Greece saying, you know what, all these policies, all these austerity measures, we tried it. Our citizens said, screw this, because it sucks. It sucks really bad, and life sucks with this. And they find it unbearable to the extent that you said, you know what, we rather get out of the eurozone, get out of the euro, go back to a economy or a government where they manage their own currency. So I mean, Greece was never very happy about everything, and then eventually they were forced. They were backed into a wall, and they're like, you know what, fine, we'll concede to all these things that you wanted. But what Greece really wanted was monetary infusion, like assistance from the rest of the participants in the eurozone, so that they could help them boost their economy beyond the recession and into a healthier state, so that they could sustain themselves. But instead, the eurozone largely decided, hey, you know what? You guys weren't pulling your weight, so you guys just gonna have to be enslaved. And they're like, well, we're not happy with that. And then the rest of the country's like, well, we're responsible for our money, you're not, so that's just the way it is. You guys screwed up. This what you guys had to pay for it. And of course, Greece doesn't want to pay for it. So this is going back to the same discussion they had before. It's just been massively delayed.
Yeah, pretty much. I mean, I'd really like to see how long the EU is going to last. I mean, Greece, everyone's pretty much threatening to kick them out at this point because they're such an underperformer. And on the other hand, the UK, I mean, they're not exactly performing all that bad, but they're not exactly, the top dog in town. And so, the risk of this Brexit, Britain exiting the EU, that's going to be interesting. I mean, if Greece gets kicked out and Britain decides to vote themselves out and becomes, more and more, what's the word? Like,
Germany? Huh.
well, I mean, like where they cut themselves off, so less globalizing and more conservative.
Well, the issue is that GDP which is that measure that most economists use to determine whether or not you're in recession, expansion, and normal state, so on, is a factor of imports and exports. So the more you export, the better your GDP is, and the more you import, the worse it is. But you think about it, if you think about the entire world as a form of business, you have to buy something, you have to sell something. Well, you can't always sell stuff when there's no one there to buy stuff. You can't always buy stuff when there's no one there to sell stuff. So there are going to be times and ebbs and flows where you're going to be positive and negative, and that's just kind of normal. I think what's the problem is that Greece, Europe has a form of centralized currency, but doesn't really have a form of centralized government. And in a way, I feel like, one without the other won't quite work out. At least there has to be a form of agreement where there are economic incentives to be part of the EU or part of the euro. But really, right now, there isn't any. Like, what's the benefit of being part of euro? Like, so that, yeah, there is really none. I can see. I wouldn't be surprised if Greece wants to exit, or if they want to change, they want to rephrase it as like, oh, we're gonna kick Greece out, but Greece wanted to exit anyways. Britain's like, hey, you don't have to kick us out. We're deciding to leave. The only ones that really benefit from the euro so far is really Germany.
Well, I mean, as we've discussed earlier before, um, yeah, if whether or not Greece stays or goes, Greece is going to be in a period where it's going to be screwed economically. The credit rating is going to drop dramatically, and it's going to drop fast if they leave, as opposed to just staying with the EU. So I don't know how this is going to play out in the long run. If that scenario actually does go out, Britain, regardless, Britain or Greece, if they get kicked out of the EU, they also lose the advantage of being able to take top talent from other countries. So, like, let's say if some guy's not doing good in one country, but maybe he speaks several different languages, right? Well, maybe people in Britain who speak only English, just like people in America, um, maybe like they actually need people who actually speak more than one language, because they not only perform, but they also provide services, and they can connect Britain to other countries in the world. That actually makes Britain much more competitive globally. And so when Britain's going to do that, and they're going to be more restrictive as to who can come into their country, what they're doing is they're preserving their own domestic talent pool. But what is the quality of that domestic talent pool, right? And the same thing is actually, you're going to see it with Greece as well. Is that like, and it's with Greece it's even worse, because aside from tourism, what does Greece really have? I mean, they don't have any sort of manufacturing or economic sector, as well, aside from tourism, that they can actually rely upon. Greece really has, I mean, nothing.
Well, I mean, it depends, because then not all economies are labor based or product based, really. I mean, if they are in the service economy, then a lot of it would be like, hospitality and service and other type of non-tangible performances, like marketing, advertisements, so on, like being doctors. I don't know. I mean, who the hell knows? Scientists. There's a lot of intangible products that a country can export. I mean, you can hire, kind of like India, Americans hire a ton of Indian labor from overseas, to do like phone calls and so on.
Right.
I mean, I think the problem with a lot of these countries is that just like physical resources can't be finite. It's like you can only have so much oil, you can only export so many diamonds, you can only chop so many trees before eventually, hey, you know what? We don't really have that much to export. If the economy shrinks, that's what it is. If it shrinks, then it shrinks. But, quoting like Bernanke, when basically, there were concerns about inflation causing the dollar to weaken, he's basically saying there's not that bad of a thing, because the dollar weakens within the country itself, everything is still relatively the same. It's just that now the country is very attractive to foreign investment. So perhaps Greece might encounter the same thing, where they're going to revert to their own Greek currency, and then a lot of foreign investors from China, Russia, Britain, Germany, America, and so on, are just gonna go, hey, you know what? I could buy a house for $1,000 in Greece. I don't know what I'm gonna do with this house, but it'd be nice to own a property. Maybe someday I'll visit. They start thinking these sort of things, and then money's going to start pouring back into Greece's economy again. I think one of the concerns that Greece has is that normally there's a supply and demand. There's a like a like a basically a bargain flash sale whenever a country goes into a recession or depression where things just become cheaper, and they weren't able to do that because of the eurozone's impact. You're like they want to lower the prices, but they can't because it's tied to eurozone. I think in a way that's why a lot of these countries are thinking, you know what, the eurozone's really not doing that great for us, because normally the currency can be a factor to regulate the economic health of a country. Things just became so insanely cheap that China has manipulated the currency to do just this. But Greece naturally will undergo this effect, and if the currency drops, then a lot of people will buy stuff from them. A lot of people will invest in them. But since they can't drop, then that is a problem. And if the euro had a mechanism where the rest of the countries will aid failing countries, they don't really need it. But in this case, the euro basically said, you know what, we're not gonna. IMF later literally say, hey, we're not gonna help you out with this. Then of course they're like, you know what, the eurozone is not what we sign up for it to be, and it's not helping us that much, so we want out. So either way, Greece wanted to exit either in in their own way, or they wanted to exit by being kicked out. I mean, the eurozone is looking less and less attractive, and it's like basically Britain's considered leaving it just for this reason. They're like, there's really no incentive to be part of it.
Well, I mean, they could go ahead and spin it in the way that, like, yeah, there's no incentive, quote unquote. But I think there are a lot of incentives. But you can't say that to your domestic public, because then that makes you look weak, right? You're saying like, yeah, there's a lot of benefits to being a part of the EU, but screw it, like, I mean, no one's going to vote for that sort of policy. So you're going to try and sell it, as saying like, oh, well, we're going to be better off without the EU, blah, blah, blah. But I don't necessarily think that that's going to be the case for Britain. I mean, yeah, it'll protect some people's jobs, but in the long run, I don't think it's going to make them, well, I hate to use this word, but competitive. The quality of HR talent, human talent, is just not there. But then, of course, I mean, maybe that's just what they need to stimulate the economy. I mean, even though you're hiring people within your country, but by doing that, maybe you're going to raise some wages, and maybe that's what they need. Who knows? Anyways, let's move on to another topic. Let's take a look at the week in review. According to the week, Monday was kind of dragging around, and then Tuesday things just shot up, and they kept going up all the way Friday. Thursday brought us back into the black for the quarter. So, and despite the slight dip at the beginning in Friday's trade, we were up overall, and some might be worried that this might be another bubble. However, according to other analysts who follow the overbought, oversold model, we're not overbought yet, which means that these people believe that the markets can still rise. So, feel free to chime in. Otherwise, we're going to go to the next section.
Well, it could rise, it could fall, it could go anywhere. It could be anything. It could be a soaring dragon or a...
All right, we get the point. Let's move on to the next section. International markets. Okay. So Australia was up. It was like really up. So, and this is on the new... Well, I'll get to that in a bit. New Zealand, same thing. These are both on news that the U.S. job reports are actually doing good, and so they're good trading partners of ours. So the Nikkei, let's see, Japan started off the day struggling and fell 3.55% initially on the news that their currency strengthened even further. However, things are starting to look better, and they are barely in the black the last that I checked. So. Korea's Kospi is slightly up, but it's very choppy compared to 2 quarters ago. Trading activity is lower. Being as they are close trading partners with China, they are very much worried about their economic performance. However, they did at least at one point pass the 2,000 resistance point, but they are slightly below that 2,000 number mark right now. So. China's manufacturing report came out, and it was up from earlier numbers at 50.2%. A score of 50 usually implies an expansion in activity. So while manufacturing activity is slightly seeing an uptick, the sector is seeing massive layoffs, as we mentioned earlier, and this plus their credit rating getting lowered. Their economic predictions are growing at a slightly lower number. People were hoping for somewhere between 6.5 to 7%, and now people are more convinced that it's more at 6.5%. So there.
Doesn't seem too bad.
Oops. The TSEC, Taiwan's economic index, lowered actually. Usually they track China pretty well, but they were lower for some reason, unlike China's stock performance today. Um, the same thing with Hong Kong's Hang Seng Index. So unlike the rest of Asia, Hong Kong and Taiwan were going against the trend, and they're both down. So now let's look at the playbook. Again, just a reminder that the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. GLD. Yeah, I lost like 200 some odd dollars on this one. And just because Janet Yellen opened up her mouth and was like, oh, things are going risky, blah, blah, blah. Like, oh, geez. You couldn't wait till I sold the dang freaking option. Oh, man. So I went from losing $55 up to like 200 some odd dollars. So I'm like, whatever, I'm just cutting my losses. Of course, the next day it goes back down. So I'm like, oh, jeez. Whatever.
Told you. Too much like gambling.
Yeah. So yeah, PHG, my last hope. And I'm pretty sure I'm not going to make up anywhere near what I lost with gold. So anyways, let's get away from this depressing news. And let's look at what you got. You got anything aside from
Um,
Caesars? Any updates on that?
no, actually, I should have sold on Monday. I held on too long because I guess something's happening behind the scenes that I don't know about. But essentially, they declared bankrupt. They're on a judge ordered them to declare bankruptcy. So I don't know why the stocks are going up at all for any reason. So I guess, the judge's like, oh, you know what, these numbers don't make sense somehow, and then bankruptcy is involved. And then somehow it got shot up for the whole week, and now I guess it's back down again to a point where I could have made money. Wow, yay. But of course, I had a limit put. I have a limit stop on it. So sometimes I employ limit stops just to. So my mentality is that, you know what, if a person has the power to kick this stock up to a certain extent, you know what, I'll let them take the money. So they did just that. So I'm like, you know what, just keep it. But I still think, you know what, if they're on track for bankruptcy, then there's really no reason that it should be afloat right now. So I have to definitely follow that more, but I'm gonna keep my eyes on Caesar for a little bit just to see if they're truly going bankrupt.
Okay, well, let's take a look at the week in review then. Or, I'm sorry, the week ahead. Haha.
Mhm.
Monday, the Gallup poll on U.S. consumer spending will be released, and after that, the labor market conditions index. PMI Services Index will be out on Tuesday, and Wednesday, Gallup's Job Creation Index, followed by the EIA's Petroleum Status Report, will be released. And after Loretta Mester speaks, the Federal Reserve meeting minutes will be released as well. Thursday, jobless claims will be out, along with the Bloomberg Consumer Comfort Index, and Janet Yellen will make another announcement. Internationally, there's nothing really that I care about right now, so we're going to skip that.
Ah,
It's too depressing. Too depressing. So let's move on to recommendations. The LA Times spent an entire article to make you realize how much you should be taking out of your retirement savings. At the end of the day, they recommend no more than 4%. And if you're taking out more than that, hope you die soon. If that's not enough, you're either spending too much or not saving enough. That's basically the short of it. So, what about you? You got any recommendations?
nope. Work hard, save money, see a good stable investment opportunity, then go for it. But right now, I'm not sure there's any good investment opportunities in the stock market.
Okay, well, I think that's where we end the show right now. So just a reminder, we may or may not have ownership or other positions in the stocks mentioned in the show. Don't buy stocks based solely off what you hear in this podcast, and always do your own homework and research before investing in stocks. And if you like this episode, please don't forget to subscribe on our YouTube page. Just go to youtube.com and type in Conquering Path. That's CONKERINGPATH. I know it's a long one, but hey, you're going to find us right there. And you can subscribe. We need those numbers. Come on. Anyways, yeah.
We have bills to pay.